Today, through this video, I am explaining the features of a new category of mutual fund, that is multi-asset fund. One can invest in a range of asset class through the use of single multi-asset fund. This asset class includes equity, gold, real estate and overseas equities. I am Prakash Nair. Welcome to my YouTube channel. A fund that invests in a variety of asset class may not always have the best performance in any particular year. This is because of the diversification the fund provides. The concept of multi-asset fund is comparatively new to the Indian market, but it is generating attention nationwide across different investor class. So, you are not aware of this concept and how it works, then it is high time to learn about it as the market is improving following a difficult times of the COVID-19 pandemic. Now we examine what is a multi-asset fund or a multi-asset class fund. A multi-asset class fund or multi-asset funds are typically mutual funds that invest in various asset class that includes debt, equities, real estate, gold, derivative. Again, they will keep some portion in the cash. Allocation of investment in each class, however, depends on the investor. The inevitable question that arises here is why one should go for this type of fund instead of other mutual funds like that, pure equity fund, diversified fund, sector fund, value fund, whatever it is. See, there are two major reasons for this one. See, there are varieties of mutual fund schemes are available presently even within the equity category. Then the question is why one should go for this multi-asset class fund. See, the first reason is less volatile. This is the first reason to invest in multi-asset class fund. Less volatile. Return on mutual funds are related to the market performance and the risk associated with it. Therefore, one is investing in an equity fund, then it is less volatile to the market movement, but it will generate comparatively lower return as well as. Similarly, multi-asset funds invest across various classes, and since every asset class will perform differently in an economy, the losses that one will incur from one debt investment will be balanced by gold or real estate portion. This is the beauty of this asset class. Therefore, in terms of return on investment, you are not at a high risk or there is no chance to lose your investment or capital also. The second point is portfolio diversification. Another primary reason for choosing multi-asset fund is portfolio diversification. With a single investment, one is buying into three different classes, which is a unique opportunity. Suppose you are investing in a diversified equity fund or a sector fund. In case of a sector fund, that fund will invest only in particular sector, example IT sector, pharma sector. The underlying investment will be always related to those sectors, particularly IT, pharma, FMCG, whatever it is. We need to see the objective of the fund. However, before investing in this mutual fund type, you need to consider few things to make an informed decision. You need to ask a few questions. Is the fund diversified enough? Okay, this is a multi-asset fund. I and you agree. But whether this fund is diversified or not. Fund is allowed to invest in different asset class, multiple asset class like equity, debt, gold, real estate, whatever it is. So we need to see the concentration of the assets. Suppose the underlying assets are concentrated in particular sector or particular class of asset, then there is a great degree of risk. So you need to ask this question first, is the fund diversified enough? Okay, the answer is yes, go ahead. The second question is, there are not alternative in individual portfolio diversifications. See, you need to see the diversification of portfolios. how much percentage invested in each sector or each asset class, each type of asset class. Another important question or another important aspect, you need to see the applicable tax benefit. What type of tax benefit you are going to receive when investing in a multi-asset fund. Suppose this multi-asset fund is more concentrated on debt equities, then there is a difference in the tax treatment of debt fund and equity fund. That I will explain in the later part of this video. Again, the important thing is you need to see the fund manager. Who is the fund manager? What is the credibility? You need to see the credibility of the fund manager, their past track record, performance track records, etc. See, another question, or another thing we need to consider or we need to discuss is basically who should invest in this multi-asset class and who should avoid this particular class of assets. The answer is, again, the first time investors, irrespective of their age, maybe they are 25 or suppose your age is 40, 50, doesn't matter. First time investors are recommended to look at multi-asset funds rather than pure equity fund or diversity fund, sector fund, or multi-asset fund, or flexi asset class fund, whatever it is. First time investors are first look into this multi-asset class because there they are getting a diversification among different class of assets. Because former provides a lower risk than the later. Former here is our multi-asset class fund, but other funds, other equity funds, their risk ratio is very high when compared to a multi-asset class fund. One can invest in a range of asset classes through the use of single multi-asset fund. That is the beauty of this fund or this asset class. These asset class include, as I explained, equities are there, debt funds are or debt instruments are there, gold is there, maybe not physical gold. I don't think mutual fund can invest in physical gold. Mostly they will go for a digital gold or ETF, exchange traded fund like that. This is very liquid when compared to physical gold. Digital gold is very liquid. Whenever the fund manager want, they can easily sell those securities or those digital gold and realize the cash. Also real estate. Real estate is one of the underlying assets. Real estate also, real estate is not liquid. Physical real estate or is not that much liquid when compared to real estate companies, investing in real estate companies shares. Maybe fund manager may opt to invest in those companies operating in the area of real estate development or renting of properties, leasing, etc. Also, the fund manager can consider investment in overseas equities. See, overseas equities investment can be made in different ways, but normally in India, these overseas equity investments are happening through fund of funds. Our local fund managers investing in the funds operated by fund managers outside the country. So they will do the evaluation, fund performance, portfolio analysis, etc. Based on that, our local fund managers take a decision to invest in overseas funds. This will give us a global diversification. So whatever happening around the world, so if the fund manager or one of the underlying asset or many not one, maybe they will invest in many companies overseas. They may directly buy shares from the overseas market, or most of the cases they will go by fund of fund investment nature, selecting good fund with a track record, good fund manager, managing overseas or countries outside India. Also, one need not go through the hassles of investing in a variety of funds This is another asset. See, suppose if you are planning to invest in the equities, debt, gold, real estate, etc., you need to go for a different type of funds. You need to select 4 or 5 funds for that purpose. Suppose if you are investing in multi-asset or multi-asset class fund, this is the advantage. One go you can do the investment, the fund manager will take care the rest, managing of the fund, giving you the return, etc., will be taken care by the fund manager. Also, fund that invest in a variety of asset class may not always have the best performance in a particular year. This is because of the diversification that fund provides. For example, with equities, the risk is there from volatility and concentration in one category or a theme. That I told you, theme means a thematic fund or a sector specific fund. Again, if you come to the debt, there is a liquidity risk. There are many risks associated with debt investments or bond investments. Bond investments are comparatively comparatively less risky when compared to equities. But there are lot of risk associated with investing in debt instruments. The first risk or foremost risk is liquidity risk. Another one is repayment risk or credit risk and interest rate risk. These are all the risks associated with a debt instrument or a bond. If you come to the gold, we need to see the growth, inadequate growth of the gold and the tax efficiency. So when you invest in gold, the tax benefit you are getting is not good when compared to equity investments. So we need to consider all these things before investing. Again, according to industry report and studies, more than 90% of long-term returns are determined by the mix of assets, not a single asset or those assets concentrated in particular sector or asset class. Hence, it is more important for an investor to be diversified so that his investment is protected from high volatility than to maximize profit. That is also our aim. Our main aim of investment or making investment is earn a good return or growth. Also at the same time protect our capital. We need to get a regular income or a growth or capital appreciation. At the same time, we should get back our money. This is the primary motto of all the investors. Nobody wanted to lose their money, but someone wanted to take a risk. So if they take more risk, they will get more return. Again, one might also be able to take advantage of a bull market with the assistance of a multi-asset mutual fund. At the same time, it can witness adverse market conditions such as a bear market, having also they can experience investors or those who have advised wrongly. Some investors now or advisors, they are giving wrong advices to their clients or public. This is not a good thing. Again, we need to see what is the tax implication, how the return generated from the multi-asset fund is tax. Multi-asset funds are most cost efficient and tax efficient when compared to investment in individual asset. For equities, debt and gold investors pay short-term capital gains and long-term capital gain tax. Again, if you come to multi-asset funds, again multi-asset funds are normally invest 65% of minimum 65% of their investment in equity instruments or underlying assets. So almost 65% or more than 65% in equity or equity related instruments. So naturally, these multi-asset class funds are treated as like an equity fund. So equity fund, there is a tax advantage in investing in equity funds. If one holds for more than a year, gain over 1 lakh. See, if your investment, this fund is considered or treated at par with diversified equity fund or equity fund or direct investment in shares or stock. So up to 1 lakh, if you earn capital gain over a period of time or more than 1 year, if you withdraw your investment after 1 year, that tax will be considered as, or gain will be considered as long term capital gain. Long term capital gain is taxed at a concession rate of 10% over and above 1 lakh. If you earn or if you generate a capital gain in a particular financial year up to 1 lakh, you need not pay tax. If any gain more than 1 lakh, you need to pay marginal tax of 10%. This is very advantage. This is comparatively, this is more tax efficient when you compare it to the investment in debt fund or commodity fund, gold, real estate, whatever it is. Again, short term capital gain, if you sell your units within 1 year period, that type of gain is treated as a short term capital gain. You need to pay 15% tax on this one. See, this is the thing. So I already explained to you the advantages and disadvantages of investing in a multi-asset fund. Now we need to see the performance of few multi-asset funds in the market. So here I am comparing the performance of first 5 better performing multi-asset fund for 5-year period. See, the best performing fund is ICICI Prudential multi-asset fund for a period of 5 year CAGR, compounded annual growth rate or return. See, they are the largest multi-asset fund manager in India. They are managing more than 13,500 crore of assets. For this particular funds, asset under management is more than around 13,500 crores or 13,300 crores something. They generated a return of 13.85% for 5 years. This is the figure for 9th, as of 9th June. I'm taking the NAV of 9th June. So this fund expenses ratio is little bit high when compared to other funds. Their expenses ratio is 1.7%. Doesn't matter, but their performance is better when compared to other funds. The second in this category is HDFC multi-asset direct investment plan. They are managing around 1,500 crores worth of assets. Return is 10.5%. 5-year CAGR is 10.5%. Also, their expenses ratio is 84.84, less than 1%. Then third one is Axis Triple Advantage Fund, is given around 11.36%. SBI, fourth one is SBI Multi-Asset Allocation Fund. They are managing around 556 crores. Their return is around 9%. Fifth one is UTI Multi-Asset Fund. They are also managing around 850 crores asset under management. Their return is around 6.5%. If you compare the return, first one and the fifth one, ICICI Prudential Multi-Asset Fund giving 13.85% for this is 5-year CAGR. Like that, fifth position is UTI Multi-Asset Fund. That gives around 6.5%, half of this one. So this is the best performing 5 multi-asset fund in the market, the mutual funds in the market for 5-year return. This return is calculated based on the NAV on 9th June 2022. These are all subject to change. Tomorrow, if you calculate this return, you will get some other return. Maybe someone is performing today well, but tomorrow that fund may go to the underperformance also. That chances are there. So always keeping in mind that the investment in multi-asset class fund also risky. These are subject to market variations. These prices may vary, or the performance of the fund may vary based on the performance of the underlying assets. Multiple asset classes are there, underlying assets, multiple asset classes are there, equity is there, debt is there, gold is there, real estate is there, maybe global investment or global equities are there. Based on the performance of these underlying assets, your fund performance is mainly depending upon the market as well as the performance of the underlying assets. Even debt instruments also risky. Even investment in government securities also, there is a risk involved. So we need to keep all these things before we take an investment decision. Also, I will come to this ICICI Prudential. I will give you some more details about this ICICI Prudential fund. See, its asset, this particular fund, around 68% is investing in equity. Within that equity, around 59% is in large cap. 5.4% around more than 5% is they investing in mid cap. Around 3% they invested in small cap. So within equity, if you see this one, this equity investment, they are comparatively risk free, comparatively less risk when compared to other sector fund or multi cap or flexi cap fund. Because within equity category, they invested around 59% in large cap funds, large cap securities. Again, around 27% they invested in debt instruments. Within that, 3.7% in ICICI Gold ETF exchange. They have not invested in physical gold. They invested in ICICI Gold ETF fund around 3.7%. Again, tripartite repo around 13% is there. So this is the portfolio composition of this ICICI Pru multi-asset fund. It's okay. It's a very good portfolio. The diversification is there. They invested in 3 or 4 asset class. So if one asset class is not performing well, if other asset class perform well, so this return or whatever return going to generate is compensated in one way or other way. Also, you need to keep in mind that this particular fund 1% exit load is there. If you redeem your unit within 1 year of your investment, asset management company will deduct 1% exit load. This fund started in 2013. So that is the reason I have given you 5-year return computation like that. Always please keep in mind that this is not an investment advice. So you need to do your own research. If you are not understanding all these things, or if you are not capable of computing or assessing the risk or performance of a fund, definitely you need to take the help of a financial advisor. So this is not an investment advice. This video is prepared only for an education purposes. So I hope you understand what exactly multi-asset fund, advantages of investing in multi-asset fund, risk involved in investing in multi-asset fund, etc. Thank you for watching this video. Thank you very much.